It's time to do business. Welcome to 25 minutes of going around the world of business. And here's what we have prepared for you. In Zimbabwe, it's out with the old and in with the new. The new Naira notes are on. The new Zig notes are on. And in Rwanda, by next year, June, there'll be a new digital ID for the whole country. Making history in Somalia, the very first offshore oil drilling begins this month. You're welcome to the program. I'm Ini John Mekwa. We start from oil. Prices edged higher Monday after President Donald Trump doubled down on his threat to destroy Iran's civilian infrastructure if Islamic Republic does not agree to reopen the Strait of Hormuz. And so we saw that unusual picture continuing this afternoon now. So is Brent. Brent is up 0.60%, while at $110.44 for WTI. There we see the unusual picture there. It's higher than what we have in Brent. Very unusual, rarely happens. $113.84. It's gained more than 1%, 1.16%. And of course, all of this is after President Trump reiterated that demand that Iran should open the Strait of Hormuz by today, 8 p.m. ET time. And the president believes that the Islamic Republic's leadership is negotiating in good faith. But of course, we've seen news that Iran says that they are not into any conversation of peace except the war stops automatically. And Iran has effectively kept the Strait of Hormuz closed through attacks on oil tankers. And the sea route connects the Persian Gulf to world markets. About 20% of global supplies pass through the Strait of Hormuz before the war. The closure of the strait has triggered the largest oil supply disruption in history. Crude, jet fuel, diesel, gasoline prices have surged. Even fertilizer has been affected. President Trump has said in a national address last Wednesday that the war would continue for 2 or 3 weeks, and nearly 1 billion barrels will be lost by the end of the month, comprising up to 600 million barrels of crude oil and roughly 350 million barrels of refined products, according to TD Securities. Well, we see what's happening with gas. In the midst of this, let's go back to that slide about the gas. There we see, amidst the rise in global oil prices, we see natural gas has dropped 0.07%. It's now at $2.80 for gas. And talking about gas, let's talk about cooking gas, especially back here in Nigeria. We have analyst with financial derivatives company, Ajibola Ayodeji. Is a financial analyst, He's an analyst with financial derivatives company and joins us virtually. Hi, Ajibola. Good afternoon. Welcome to the program.
Good afternoon, and thanks for welcome.
Great. So we're seeing what's happening with oil, and we know that the Strait of Hormuz also has, some seeping impact into gas. Whatever affects oil, obviously, would affect gas, at least the demand for it. How's this affecting the price of cooking gas at this time?
Okay. Thank you. Like it was stated earlier that like you said, that whatever is happening in the global space, we have impact on Nigeria because Nigeria is more integrated into the global economy than it was before. So we have seen an increase in the price of energy costs, and this has also affected prices in Nigeria, not only when it comes to maybe crude oil or not only when it comes to PMS or diesel. We also see commodities. Commodity prices have increased, and cooking gas is not an exception. So we are seeing an increase in the price of cooking gas due to this one, to the increase in energy cost. That's one. Another thing is the fact that there was a supply constraint in March, which led to the increase in price. It was reported that the 20 metric ton of gas at the depot price increased from 18 million in February to 21 million in March. So this also contributed to the increase in the price of of cooking gas. And another thing I want to mention is the fact that there's still a transportation constraint, or let me say infrastructure constraint or logistic constraint when it comes to cooking gas, because the price of diesel, which is used to carry this gas across country, has also increased by about 82%. So because of the increase in the cost of logistics and transport, this also contributed to the increase in the price of cooking gas we are seeing presently.
Yeah, so amidst all of this, the surge in price, we have heard that the Nigerian government will be having more revenue, hopefully, from the increase in oil. And we know that when it comes to gas, Nigeria is holding the largest reserve on the continent. Do we also see Nigeria maybe increasing its revenue, or at least usage, when it comes to gas amidst the war?
Yes, I think so. I think we should be able to see an increase in revenue. And the reason why I said is the fact that Nigeria is subjected to global benchmarks. So whatever is happening to the price or to the global pricing, it's also affecting what the revenue or what we are getting from gas production in Nigeria. That's one. And another thing is the fact that Nigeria LNG Limited is a commercial entity and not a price stabilizer. So the fact that they want to maximize profit aligns with global opportunity cost. So there is need to increase whenever price increase or the global energy cost increase, there is also increase in the price of LNG. And because Nigeria, we are increasing production, we can see that the production of Nigeria has increased from what it was in 2023 or 2024 to what we are producing now. For example, what we import in 2023 was about 47%, and our import has declined to around 13% in 2026. So with this increase in production, we should be seeing an increase in revenue for Nigeria, for government, and even for the players in the energy space.
And what do we see when it comes to global prices of gas amidst the ongoing war?
Okay, there was an outlook by EIU that says that the price of LNG is still going to increase in Q3, even to Q4. So we're still going to, because of this increase and because of the disruption that has happened to some infrastructure in countries like Qatar and some other countries, we might see a shift of countries that need the consuming country shifting to other countries that are producing LNG to meet their demand. So countries like Nigeria, like US, like Australia could see an increased demand, which will also increase their revenue. And there will be an increase, or let me say, because buyers want to hedge against volatility, there could be the reduction. There could be a reduction in the demand for sports commodity and increase in the demand for future commodities.
All right, thank you so much, Ajibola Ayodeji, helping us to understand the new normal is what we are seeing now. Thank you for your time.
Thanks for having me.
Let's go to the metals market. We see gold prices today rose as investors remain cautious ahead of the deadline set by President Trump. That's later on tonight for the United States and very early tomorrow for a country like Nigeria. Spot gold we see is up 0.17%, and the price is still under 5,000. It's $4,692.80. Spot silver is on the flip side, almost 0.5% down at $72.54. Platinum is about 0.5% in the red, $1,967.60. Palladium is also down almost 0.5% at $1,484. Copper seems to be different mostly from other metals. We see it in the green this afternoon, 0.13% up at $5.60. And now see some happenings around the continent. We start from Somalia. They're about to make history. They're on the verge of embarking on its very first ever offshore oil drilling operation, marked by the arrival of the Turkish driller ship in their waters. The Turkish Petroleum Corporation's deep water drilling vessel will conduct its first international mission off the Somalia coast and is expected to begin drilling at the Kurad-1 well in the current month. That's April. And data suggests that Somalia's offshore basins could hold between 30 billion and 40 billion barrels of oil and gas equivalent. Imagine what that would do to, the circular, the supply that we have at this time. Let's go to Zimbabwe, where the Reserve Bank of Zimbabwe says that all is set to roll out when it comes to the another new ZIG notes countrywide. And the central bank introduced a series of new ZIG notes, ZWG, that's how they put it, dubbed the Big Five in February 2026 this year via the annual monetary policy presentation. And the initiatives are part of efforts to bring on board durable notes quality with prints. They've been struggling with notes and the value of their currency for a bit. Let's see if this will last or bring a lot of change. And then we move to Rwanda. In Rwanda, the government is eyeing the phase out of its national identity cards by June to transition to a full rollout of its national digital card. And it's going to be called Single Digital ID. I think they're following Ghana. Ghana have done a big one when it comes to this. Rwanda officials warned that citizens who fail to obtain their digital ID may risk difficulties accessing public services as institutions increasingly adopt digital verification. A nationwide enrollment campaign is currently underway, and officials are encouraging residents to take advantage of it. In Egypt, the Ministry of Labor has banned Egyptian women from working in hospitality and domestic jobs in other countries, especially in the Gulf. And that, of course, is sparking nationwide debate about the reasons for the decision and the failure to find alternatives for low-skilled women who are badly in need of work outside their country. And of course, we know that a lot has been happening following the war in Egypt. The price of petrol and fuel have been increased. Now, from the 1st of April, the nation makes it impermissible for recruitment agencies operating in Egypt to send Egyptian women for hospitality jobs, such as cafe waitresses, baristas, and counter staff, food and beverage servers. And it also bans the work of local women in private homes as housekeepers, home cooks, caregivers, personal assistants, home nurses, or household managers. Well, it does sound like it's a way to protect the women, but of course, on the other hand, perhaps the women are being denied, the source of income. Let's head to the markets now and see what's happening at intraday. There you have it, the NGX is in the green at this time, sustaining 201,000. I'm getting bored of 201,000 level, but I mean, at least there's a bit of positive movement. We've had this before the holiday, so it's still on 201,000, but it's perhaps at the close of trade we'll have a 202,000 level. But intraday is 0.11%. And staying there, let's talk a little bit about what's going on in the market, the Nigeria's market. Now, of course, the recap has ended earlier today. Ladi had a conversation with a director from the Central Bank of Nigeria. After the recap, then what's next? And there's some earnings coming in. For instance, we see Wema Bank. Wema Bank, they've released their earnings where we see some positive numbers. We saw interest income has gone up 62.4% year on year. Interest expense is also up 21% plus year on year. Net interest income is more than 100% up. There you have it at 360.98 billion. Operating income at 79.6% operating income. Profit before tax, we see, has also gone up more than 116%. Profit after tax is also up 125, as well as earnings per share. Now we have also Zenith Bank. This is the freshest of the earnings that we have seen in the market. We see for Zenith Bank also interest income has gone up 34.97%. Net interest income is also up more than 50%. Impairment charges also up, as well as net interest after impairment and net income on fees. Now let's look at this a little bit more. Joining us in the studio at this time is Mr. Mukhtar Mohammed. He's the Chief Executive Officer of Finance with Mukhtar. Mr. Mukhtar, good to see you.
Thank you, Ini.
Yeah.
And a very good day.
Very good day indeed. So after the recap, and then we see this, what do these numbers tell us?
So there's a lot, in store for investors in the banking sector, especially when you know that this was driven from from the recapitalization drive to where we are today. So we'll begin to see those numbers from the recapitalization begin to play in maybe between the first quarter to the half year. When you look at this result, especially from Zenith Bank, you've just seen those interest income up, the net interest income up. Imperial charges, this is huge. If you have an imperial charges of this nature, and then you're also able to deliver a profit after tax of about 1 trillion. I mean, they have done it consecutively for the past 2 years. And also, this is the 5 years highest profit they've ever had. And then when you look at their loan book also, quite impressive. Where other banks might look at their loan book, you see that most of their income is driven from investment. Zenith Bank income was driven mostly by loan expansion. So that tells you that there's a lot, especially now with the new capital base, they tend to improve. And then don't forget the ones that all investors will always like to hear, the dividend payment has gone up by 50%. Last year they paid 1 naira interim, 4 naira final, which make it 5 naira. But this year they have paid interim, final about 8 naira 75 kobo. Interim was 1 naira 25 kobo. When you put that together, that's 10 naira. So an increment of 50%, which is huge.
And I guess Zenith Bank will have a lot of boast because we know that the banks did struggle with their impairments, but seeing that the net interest after impairment is that high is something that they could boast of.
Yes, they should. They should. Like I said, it's a pointer to very good risk management structure that they have in the bank, able to do that and then still be able to pay, be profitable again in spite of that. And if you look at their loan book, like I said, the expansion was there also, and then you see their non-performing loan also went down. So that again is huge. When you have non-performing loans coming down, that tells you that, like I said, their risk management structure is very strong.
Yeah, and the loan to the real sector, that's a major concern because now we have this extra capital that has been brought in by the banks. But it's almost useless to the economy except it is channeled back to the real sector.
There's a disconnect. So we need to make that known. If you look at there's a lot of disconnect between what reality is on ground and what the government is telling us. You just have to look at the numbers of the company. You just talk about Wema Bank. If you look at that result from Wema Bank, you see that most of their result came from their investment angle rather than doing the lending to the real sector or to other economies, because they see that microeconomic instability, and this is largely driven by fiscal policies that have not intend to synergize with what the monetary policy is doing. So definitely those are the challenges that they are coupling with. So a lot of banks seems to withdraw in terms of lending to the real sector. That's why you have to commend a bank like Zenith Bank, which you see that about 1.something trillion in terms of their profit came in from their loan book and lending to the real sector. And if you look at the banks also, Zenith Bank especially also, they've been able to balance liquidity in terms of high liquidity ratios. Even their own supersedes even the banking sector by 1%. We tell you that the banks are so liquid. So how can this bank lend to the real sector? Is that disconnect in terms of the fragility of the economy?
Can we place this at the doorstep of the CBN, the MPC, making the banks loan more, give more loans to the real sector?
You see, you have to also place it I don't think it's the CBN. You have to place it on the government side. Why do I say that? Even if you run a business and you want to give loan and you see high risks in terms of loaning that money to the business, and then you see short windows where you are able to short windows that you're able to make returns. You see the fixed income market, you see the kind of borrowing. Just today we're made to know that the government will also be borrowing. As a bank, yeah, you want to play that space. It's a safer space for you. It's a safer instrument. You want to make good return to your shareholders. That's why I said the challenge is not with the monetary side, it's with the physical side. As long as this borrowing is in, and this borrowing tends to crowd out the private sector. And so the banks are more comfortable giving loans to the government and having those high returns. And don't forget the high liquidity ratio they have to keep with the CBN also. That is also another challenge. If you have such money, if you have allowed them to bring it in, then maybe they would have seen ways to want to borrow more and look at long-term borrowing. So it's both ways. You look at the monetary policy, you look at the fiscal side. But I think what is creating the kind of disconnect is the high borrowing cost from government, and then these banks need to connect to it.
Just briefly now, because we're like almost out of time. At the glory days of the banks over, we saw the banks surging, when we're counting down to recap. Now that recap is over, what else for investors especially?
The glory days have just started. I tell you, if you look at what the banks will be able to achieve with the capital base they have.
But they have to be innovative to be able to attract investors.
They will definitely. Let's talk about, if you look at Zenith Bank, they're already innovative. They're already having branches in Manchester. They just opened it there. They're trying to expand to other world capitals. Look, I said it anytime, the success story of the Nigerian financial space is not complete without looking at some of these banks, how they have been able to emerge in bigger cities, and they are operating there despite that high regulatory environment. So you need to give it to them. I just think it's the beginning, but then the regulators must be on their toe to make sure that we don't get to where we're seeing so much in terms of intervention in other areas than leaving their core areas. For me, that's the only challenge.
All right, Mr. Mukhtar, thank you so much. All right, let's head over to Berlin now and see what's happening in the banks. We have Lars. Hey, Lars, good afternoon. Missed you yesterday. Sorry about that. But how's the market? How are investors doing this afternoon?
Well, you didn't miss much here in yesterday because, of course, markets here were closed for the long Easter weekend. We're dragging it all the way out to Monday every year. But now markets are back, but they're not showing up very strongly. They were, in fact, all in the green in early trading this morning, but that didn't last. Right now, Paris and Madrid are still up a fraction, almost flat, though. London down 0.2%, and the DAX a bit weaker, even dropping 0.5%. Obviously, same old topic, dominating trade everywhere, London, Paris, Frankfurt, wherever you're looking, that is the Middle East. There's scenarios out there with that recent escalation that we've seen by U.S. President Trump, scenarios where oil could go up to $200, a problem for markets everywhere, obviously around the world. And Siemens Energy down, and right now the biggest loser in the DAX in Frankfurt. Around a third of their turbine business is tied to the Middle East. So that is yet another example of how the crisis there really dominates trade all over the European markets.
Yeah, and I wonder what will happen at the end of the deadline tonight for the United States. I wonder, I mean, what's going to happen. But, I mean, outside that, we have other conversation. Germany and France, you guys have been working on a future combat air system. What was that about?
Yeah, the Future Combat Air System, you know, it's a major defense project planned jointly by Germany and France, and it was initiated almost 10 years ago when it became clear that Europe's fighter jets couldn't be used much longer as they were aging. That's mostly, of course, due to the fact that modern warfare has changed, that drones are playing a bigger role in today's warfighting. AI is involved and needs sufficient capacities, especially with regards to data and all that. Now, it became clear years ago that it couldn't be done anymore by simply updating old technology, so that a new generation of fighter jets was needed, and that those jets would have to be part of a larger system, you know, implementing all sorts of new technologies capable of strengthening really the continent's military for decades to come. Now in 2017, work started on FCAS. Like I said, France and Germany in charge together, but that is exactly where the problem started. France's Dassault Group, to this day, demands a leadership position in the development here, and of course Germany's Airbus Defense is strictly against that. Now for years there's been pretty much a standstill, and just now both governments have started a new push to actually make it work or find alternatives.
Yeah, but I mean, does it look like somebody is going to compromise to say, okay, you can be the leader, since that was the crux?
Yeah, you know, you would think it's actually relatively easy to develop this together. After all, this is a project worth more than 100 billion euros, so definitely enough money for everyone to get their piece of the cake. But the devil is in the details. The problem lies with the technical details regarding the fighter jet at the very heart of the system. France wants a jet that can take off and land on aircraft carriers, and that's able to handle nuclear weapons. Germany, as a matter of fact, doesn't have nuclear weapons and also no aircraft carriers. They don't want a jet that needs all that. They want a jet that has top-of-the-line stealth capabilities, because Germany, of course, being a bit closer to Russian airspace, they say they have entirely different military needs than the French. That, of course, is understandable. Clear why this didn't come up 10 years ago already.
So any solutions in the horizon?
Well, there's different scenarios. The first of all, and maybe the most easiest, would be if the two countries or those two companies would at some point just agree, maybe with the French taking the lead, maybe with the Germans doing more of the developmental work or so. But that is very unlikely to happen. So what is more realistic is to actually rethink the entire deal. Don't look at this as a fighter jet with an AI cloud and drone system, but see this entire thing as an AI cloud and drone system jointly developed and serving as a platform for two different fighter jets then, and one developed, of course, by France's Dassault and one by Germany's Airbus Defense. That would make a lot more sense, even though it, of course, would also have some challenges, including the fact that Airbus has never developed an entire fighter jet by themselves before. One thing is clear, however, the current state of the world, with Russia's war in Ukraine and with the war in the Middle East and with the US no longer a reliable military partner to the West, everyone knows that the time for talk really is over and that an updated future combat air system has to be put together, and fast.
Yeah, and fast too. That's also important, Lars. Well, thank you so much. We hope that they find that fast way to do it. Thank you, and enjoy the rest of your day.
Thank you, you too, Ini.
All right, let's just run through the crypto space and see what's happening to prices, the crypto price, if we could have that. There you have it. Bitcoin is now at 68,369.77. It's dropped more than 1.5%. And Ethereum are struggling with $2,000 level. XRP, a lot of reds that we see there. And stories making the headlines. We see Bitcoin ETF inflows has reached 471 million. That's happened yesterday. That's the highest daily total since February. And then outside of that, we see Georgia is registering increased energy consumption in its crypto mining sector. And we know this was a conversation some time ago. It's not over, talking about the energy being used for mining. And a whale has transferred nearly $20 million worth of Bitcoin to Binance as the flagship crypto continues to struggle. This according to Arkham Intelligence, showing that there you have it. Those are the headlines at this time. And that's it on Business Incorporated for today. Thank you so much and welcome back from the holiday. We're here to do business. I'll see you tonight for the stock market report. Bye-bye.